Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 26th of July. All right, now, this is where the week really starts, okay? And professional traders will be salivating, right? As you'd expect, the main commentaries, US dollar up flat as market awaits clarity from central banks, right? This is everything. Everything's on hold here. And this is going to create a large number of opportunities. But if you don't know what you're doing, you could get yourself in a whole heap of trouble very quickly. All right. Now, let me just run through a few things. Now, if you're looking at the global markets, okay, US equity futures, pretty neutral. Goes across Asia Pacific. Had not a bad day yesterday for the Aussie and Kiwi equities. The NASDAQ and Hang Seng didn't do so well. And as we come into the major currency pairs, we're seeing a bit of a risk-off profile just at the moment. Euro, sterling, Aussie, Kiwi drifting. Dollar pairs is coming back a touch, but there's no real sort of direction here, right? If anything, the CAD's sort of losing ground against a few things. Easier to see on this format. But what we've got is a bunch of trading opportunities today, and they are all high impacting. So let me just sort of run you through those and try and piece together some of these trading opportunities. Now, just looking first off the rack, Aussie inflation, right? Quarter on quarter expected 1%, year on year expecting 6.2%. Now, we've seen some varying outcomes here in the last sort of week or so. Really much weaker UK CPI. Sterling's come off a couple of hundred points, right? We saw a surprise Kiwi inflation number. Kiwi pushed up against the dollar downtrend, but didn't really last. And that was a sort of short-term move. But you're looking for a trend in the data. Now, we have seen the Aussie inflation numbers sort of top out, and I'll show you what the RBA have been talking about. They are suggesting that we've seen the peak in inflation. It's still too high, but we may be through the tough end of it. Now, without going into too much explanation just at the moment before I get onto the charts, if we see a low Aussie inflation number, to me, the best trending pairs are Aussie Swiss, Euro Aussie, and Sterling Aussie, right? And if you're looking for a high number, well, you've got to come back to Aussie Yen as being the one Aussie cross, which is trending higher. Then you come into, okay, where it starts to get tricky. Now, the US Fed rate decision and the press conference, these are two separate events, right? You've got to understand that because obviously the press conference follows the rate decision. We will also hear from the Fed with regards to this statement, okay, why they have made the decision they have, and then some forward guidance into what they're going to be looking for. So let me just sort of break this down. So the US Fed rate hike decision, the 0.25% is basically 100% fully factored in, right? That means if they raise rates here, there's not going to be any impact on the US dollar, right? The US dollar is not going to go up, okay? If anything, it might sort of just drift a little bit lower. Now, the real surprise would be if they don't raise rates, right, with this being fully factored in, if they don't raise rates, the market's got to sort of factor that in and they start selling, and the US dollar will fall hard against everything, right? And equity markets should rally. That's going to be extremely volatile. It's not out of reach, but what I am expecting, and the whole market is, and this is why it's fully factored in, they raise by 0.25. They will tell us why they've done that and what they think about the market. But the real most important component is going to be the press conference, right? And this is what we don't know. Now, the press conference, the first part of it, it will be text, right? Jerome Powell will read off the text, okay? But this is where it gets interesting is the Q&A, right? They start to ask questions about what their plan is and what their policy is. And that's where you can get some fresh, unforeseen outcomes. Now, and this is where, to me, the big moves will come, or the move, right? The rate decision being fully factored in, there's only one real outcome for me, and that is if they don't raise rates, the US dollar gets hit across the board, right? And that's going to complicate things with the statement and the press conference. But I'm expecting a 0.25% factored in. If we see like a dovish outcome, so the Fed comes out and says, you know what, we've raised by 0.25, we've seen the peak of inflation, there's no need for us to raise rates anymore, you know, very dovish, then you're going to see we're looking for the US dollar is already drifting lower. So, and the best trending pair is dollar Swiss and the dollar index, and you'd expect the euro to rally as well. Now, I haven't got sterling in there because sterling is basically at a crossroads, and it's about, with that weak inflation outlook, sterling's going to do a little bit harder to rally in this situation. Neutral. If we see a neutral stance, like they raise by 0.25 and they go, you know what, we don't know what to expect, which is highly unlikely, I might mind you. But then you'd expect range-bound volatile trading conditions as the market repositions itself, tries to sort of work out, is there an edge here from the press conference or not? And then if we do get a hawkish comments out of the central bank, well, to me, euro and sterling will both go down. Euro, well, it's still in an uptrend. I mean, there's room for it to go down here, and we've got to wait for the ECB tomorrow, right? Thursday. So the euro will fight hard, whereas sterling, I've got that red because it is getting very close to the crossroads, a breakdown through the next support level, and it opens up a big fall to the downside on sterling. Of course, the ECB rate decision tomorrow may have some impact on that, but that's what I'm expecting, right? So overall, I think it may be too early for the Fed to be dovish, but this is where what I like. Okay, these instruments go with the current weak US dollar trend. Everything's in place to follow this up, and we should see a good follow through move. All right. So to me, the Aussie inflation numbers, well, I tell you what, weak numbers there outside the range, and we might see a really good opportunity for a clean out on the downside. But the Aussie against the dollar, right, it's pretty much range bound. And let me just sort of run you through the technical basis of that, right? Because once you understand what's going on, and there is a trade here that I haven't sort of really highlighted, and it comes back to the Aussie, right? Because we've got the Fed, right? So if we get weak or weak or strong Aussie numbers, and we get the reverse from the Federal Reserve, okay, then we may see a big move in the Aussie because you're getting both sides of the equation there impacting. Now, let's just come back over here to the Aussie just briefly. Now, one easy thing that I would suggest you do, and I've sort of gone into to make it clear, I've spoken to a few traders recently about their daily and their hourly charts. Okay, the daily charts really giving us a closer look at the trend. Don't get too caught up in drawing every trend line on the daily charts. Okay, this will make it a bit easier for you to identify what the overall trend is. And what I'm talking about is drawing the long-term trend lines only. Don't go too short-term. And in this instance, right, Aussie Kiwi, you can see here it is drifting sideways over the last sort of year or so. Okay, so that's not really doing too much. Dollar yen, yeah, it is going higher. It's stalling here and there. Aussie Swiss is very clear to the downside. Euro Aussie up, sterling Aussie up, and Aussie CAD for me also sideways. So we've got 2 pairs sideways, 3 pairs up, 1 pair down. And that's just against the majors, mind you. Don't think you can't trade the Aussie against other instruments. So that's where I was getting my view. If the inflation numbers come out low or high, it comes down to the overall trend. And when we come into various instruments on the hourly charts, this is where you can get a little bit particular, and you might find some short-term trading opportunities. Like Aussie Kiwi to the top side here on a strong Aussie number, yeah, it's going to trigger some stop losses, okay? On Euro Aussie, well, short-term has gone down. And sterling Aussie, well, drifting lower, but sort of trading sideways. Aussie CAD, pretty much sideways. We've seen a little bit of a stop loss run here in Aussie Swiss, but the trend overall is down. And Aussie Yen, we've got a nice entry level there on the top side there as well. So identify the trend, come into your hourly charts, find the best sort of technical pairs for a strong and weak number. And then when you do find that, you can double check with your daily charts. And if you find a pair, like say, for instance, you're looking at, let me just clear the screen there. If you're looking at Aussie Yen, for instance, you're like, yeah, okay, this is great. I'm going to get long Aussie Kiwi if the numbers come out strong. Well, just go back and check your daily chart, because that'll tell you whether you hold the position or not. And in this regard, okay, it might be a bit of a hard question, but it's not exactly breaking through a topside trend line on the daily. So yeah, there's cash in it, but maybe not long term. All right. So, whereas, just to finish on that, the Aussie yen, if it breaks higher, you might see a bit more of a consistent move because the overall longer term trend is still up. Now, let's get back to the dollar. Okay, same principle for looking at the dollar, right? If I just clear a couple of these horizontal lines I've just got in there, this is what we're looking at, right? If they raise rates, don't forget it's fully factored in. So don't think you're going to be buying dollars if the Fed raises by 0.25. If they don't raise, man, these currencies are going to get crunched as the market unwinds those long dollar positions. Dollar Swiss down, dollar index down. I'd say at this point, dollar yen sideways. You've got pressure on the downside here for sure in dollar CAD, but if anything, it's sort of still maintaining that sideways activity. And looking at the euro, well, it has been trending up, as has sterling. Aussie and Kiwi are in a different phase to euro and sterling, right? Usually these four pairs work together, but they are in a different sort of phase. So just sort of factor that in too before you start going long or short all these different pairs. And then you come back into, you look at the hourly charts, right? And you can start to see now, when we go into this number, I really like where all the instruments are, right? And just looking at the currencies here, like the dollar index has drifted higher. It's in no man's land, which gives it room to move both sides of the market. If anything, if we see like the Fed is dovish, it's going to whip about and plenty of room for it to drop straight back down. But this is the thing, right? So the Fed, they don't want the whole market just getting short dollars and going, you know what, the rate hikes are over, we're done. It doesn't sort of happen like that. So expect volatility around the press conference and obviously around the interest rate decision. Probably not as much around the interest rate decision because that is fully factored in. So around the press conference, this could be very loose, right? You could see 50, 60 points up, 100 points down, 50 points up, that sort of activity, unless they are super clear. But to me, this sort of activity here, right? The fact that the dollar's back mid-range, okay, creates uncertainty. Basically, it frees up the market to move back with the trend. Dollar Swiss has taken out some stops and it's just drifting there. Same as dollar yen, right? This is why no one's really into it. The market squared up some of their positions. Dollar CAD's right in the middle of the range. You can see short-term euro, there's pressure on the downside. Don't forget, we've got the ECB Thursday. This is a great 1-2 event, Fed followed by the ECB. Excuse me. Sterling's managed to hold on to the 128, the figure handle here, and just sort of coming back. Once again, this is in sort of no man's land, as is euro. Actually, you know what? If anything, out of all the instruments, the Aussie is the one that is still, it's trading sideways and it doesn't know where to go. But we do have support and resistance both sides. So it's sort of prime. We have clear entry levels on the Aussie. And you see the Kiwi just drifting through that resistance line. So with all these question marks over the market, what does that mean? Well, it means the market is very fragile, right? And if we get very clear information about what the dollar's going to do, we get very clean moves, okay? The only hard part is the very first part of the press conference, the market, they start frothing, right? Like, I'm going to trade. And the markets, the volatility, the banks will pull liquidity if they don't know what's going on. Once they know what's going on, the liquidity will come back. But these instruments, believe me, are free to move, okay? Some have dipped below the market. Like for instance, if the Fed comes out, they raise rates, they come out extremely dovish, well, euro's going to be pushing up around 111.5 pretty quickly. Now, will sterling go? I think it'll go a bit, but don't forget, we're fighting really weak UK fundamentals. So you'll see a move here, but will it be as aggressive as euro? Maybe not. Whereas the Aussie, for a dovish Fed, has a really nice entry level and gives us room to get in. And the Kiwi, well, it's above that resistance line. It should move to the top side as well. And the dollar probably drifts low against the yen, Swiss, and the dollar index. That's pretty much what I'm expecting from the Fed, right? There's no need. So don't forget, they're a neutral party, right? They're just going to say, look, you know what? We've hit the peak of inflation. We've raised rates. That's the last time. So don't forget, they want to make sure that the market doesn't choke itself and people don't freak out. So they will be very clear in saying, you know what, I think this is it for us. And then we'll see how it goes from here. And that's where we are, right? It's like, this is a core event. Now, for traders who are, say, new to trading or been trading for a while, like, will I be trading the actual press conference? Not really. I'll probably trade about half an hour after it, right? I'll be looking for ideas because this will set us up for the next month of trading, not just, you know, the quick fire, get in the market and trade. The Aussie inflation numbers, okay, well, they give us an opportunity to trade live because that actually tells us a lot about what the RBA is going to do next month with, or in a week or so, actually 2 weeks, excuse me, with their interest rate decision. So that's, the Aussie has a direct impact on and tells us what the RBA are going to do. We've got to wait and see what the Fed are going to do. They're going to raise by 0.25. That is for sure. So just buckle up. Don't get overexcited and start pounding around these instruments because what can happen is as well, the Fed can actually talk, like say, negative, go neutral, hawkish, and then change it back. The conversation can change during the press conference, right? It can get very loose. To me, everything weighs up for a weak dollar. So I'm expecting some dovish comments for sure. And that's where the action will be. Don't forget Thursday, we get all the answers here today. And Thursday, we have a whole swag of a bunch of important durable goods, GDP, PCE price index numbers Thursday. Okay. And we've also got the ECB, right? So there's so many things happening. The two biggest central banks starting today, it's going to be on for young and old. Just don't get too caught up in things. Make sure when you are doing your analysis, the smarter trade is looking at what the central banks are trying to tell us what they're going to do with regards future rate hikes. Okay. Look at your daily charts, look for the answers where these instruments are trending. And that's where you can really find some good answers, right? And then coming back to the like global equity markets. Okay. Well, I tell you what, the way they're trading, they are expecting a dovish Federal Reserve announcement. And as you can see on this one, it's very clear where everything is going. Gold up, oil, well, it's picking itself up off the floor, but not exactly screaming to the top side. And even the cryptos there, Bitcoin slowly moving higher. So weaker dollar or dovish Fed is what the market is really looking for. And that goes with the moves in the equity markets, the currencies, and some of the commodities. All right, guys, that's it from me for the moment. But hang out there. There'll be plenty of activity, I'm sure, in the Traders for Traders Discord. You can probably get a few more answers in there as we go through these trading sessions. All right, guys, all the best. Cheerio.